All right, good afternoon, everyone. Hi. I'm Cullen. I'm co-founder and CMO of Minespider, and this afternoon we're going to be delving a little bit into how to bridge real-world assets into the crypto realm. And you might have heard other types of bridging. You'll probably hear a lot more about other types of bridging during this conference, but we think this is very key to adoption. Just a little bit about us. I actually spoke here last year about Minespider, so I'm not going to dive too deeply into Minespider, but we are a blockchain-based traceability platform. What does it mean? It means we track mineral supply chains, so things like gold, tin, tantalum, tungsten, all the minerals that go into your devices, into your electric vehicles, into your jewelry. And we do this by tracking from mine to manufacture. So essentially we gather information at every stage of the supply chain, we affix it to the materials with a QR code, and you end up with this beautiful looking product passport, which gives manufacturers an idea essentially of where their stuff is coming from. Now, we've been doing this for about 4 years, and we're very fortunate to work with some of the world's biggest companies. So for Google and Cisco, we track, for their devices. For companies like Toyota, Volkswagen, Renault, and Ford, we track for battery materials. So they know they're coming from a clean source, without human rights abuses, without environmental degradation. But about 8 months ago, my CTO and I got the amazing task of exploring some new business models. Because, we're an established company now. We wanted to figure out how to incorporate more of the cutting-edge technology that had been kind of up and coming in the crypto space, and how we could, bring about more people to blockchain, to our protocol. And one of the use cases that we came to was actually with trade finance. Now, trade finance, you can think about it, if you don't know, it's about being paid upfront for goods or services that you're selling. So a lot of small businesses in the world have issues with trade finance because imagine I sell you t-shirts. You might not pay me for 30, 90 days, and that's perfectly normal practice. But if I'm a small business, it might mean I have cash flow issues. So this gap is actually around $1.7 trillion globally. It's a big gap. And we have around 65 million credit-constrained companies in the world. Sounds like an issue ripe for DeFi, right? We have this beautiful DeFi liquidity. How do we hook it up to trade finance? So we went over to the US and we started speaking with manufacturers and figuring out whether we could actually provide this kind of service. And we focused heavily on the garment industry, which has this real issue that they have to work with alternative lenders who charge them around 20%, so around credit card fees. And then we would essentially factor or take these invoices and transfer them to the DeFi protocol. And it works in a way that probably many of you are familiar with. You have a senior tranche, you have a junior tranche, and the APYs are around 12 to 18%, depending on the risk profile of the investor or the investment. So all well and true, right? And actually we were lining up to get some funding for that project. And then we hit some barriers in terms of timing, which I'm sure you're all very familiar with the recent crash. And I think the discourse at the moment is very much CeFi broke, DeFi didn't, which is true. And this is from a bankless author, I think, which is true to some extent. But DeFi also needs to be reinvented. If we want to move forward and we want to rethink the entire financial system, we need to make DeFi stronger. And we believe that's really by generating trusted returns, by bringing a lot of the value in the real world on-chain. And I have backed by real-world assets and brackets here because I think there's always going to be a bit of a degen DeFi play, and that's normal. That's also what pushes the innovation. But we want to bring on trillions of dollars of assets from the real world to kind of push DeFi forward in the future. And great use cases in this space, Maple Finance, Goldfinch, and even Centrifuge has some really nice real-world asset pools. Not financial advice. On the other hand, NFTs, which you'll also be very familiar with. With Minespider, we have also companies coming to us asking us, hey, can you buy a mine for us? Can you buy a diamond mine in Canada? We were looking into some shipping vessels in Greece, around the $30 million investment mark. And this asset class is generally something that's not accessible to your average retail investor. And that's also why we thought the model with NFTs was really fascinating. We're like, this would be really nice to provide retail investors access to that kind of asset, especially at a moment which we all know microeconomic factors are not really working in our favor right now. Inflation is surging. So a super nice way to kind of have an anti-inflationary effect, essentially. So we wanted to build this asset management collective and then offer dividends or staking returns to the NFT holders. And when you hear me say dividends, you'll think of securities, and you'll probably get to where our next hurdles were with legislation. And honestly, we've been around for 4 or 5 years, and we had hoped that somehow legislation would have moved forward a bit more by this time. At the moment, you have two choices, right? You go to Luxembourg or Switzerland, you spend 300K, you spend 1 year basically doing everything perfectly with your lawyers to get permission to sell securities, and then you have to do prospectuses for every individual country that you want to sell in. Which is fine, but it's not incredibly fast moving, and it's hard for crypto companies to take on that kind of, unless you want to make it your full company. The other option is you go to BVI, you spend 25, 30K, and you're up and running pretty quickly, but you better hope that nobody lays any liability claims against you, and obviously that wasn't the way that we wanted to operate as a company. But there is hope on the horizon. So the EU actually just released a plan for a pilot regime for tokenized securities, and this would come into full force in March next year. So if you're an innovator, if you're a builder, really keep an eye on this one. We certainly will be, because I think we're going to see a lot of amazing use cases popping up when you can actually tokenize securities more easily. And in this regime, actually, you can also have retail investors. So they have to have a basic knowledge of DLT, but finally, we can access retail investors with securities. And the UK has a similar approach, and the US is kind of looking into it as usual. In terms of NFTs, what do we think are the future of NFTs? Well, up until this point, they were kind of lacking in utility to some degree, and we see now them really moving forward in the form of kind of collectives. You have like 1,000 or 10,000 NFTs that gain you access to this community, this ecosystem. They also are diving in a lot now to franchising, to licensing opportunities, merchandise, even restaurants, depending on obviously some of the top NFT collections. So, and also then NFT staking. So that's what obviously we were looking at doing, and we're kind of, borrowing from the whole yield farming concept from DeFi. But we're hoping that NFTs will start to bring a lot more value to their holders. And some amazing people in the space there, Proof Collective, Admit One, who I think I missed, World of Women, Squiggle, Cyber Brokers. Hopefully all of those sound familiar. They have a bit of a buy-in, but even worth following even if you don't hold the NFT. So after all these amazing use cases and this progress, we came back and we asked ourselves, okay, maybe we can find an easier route to adoption. We have the world's biggest companies. What if we just bridge them to crypto to some degree, in some way? And like the other ones, we started with an acute problem. And that acute problem for the world's biggest companies is carbon emissions right now. So most of them, or 20% of them, sorry, not most of them, but 20% of them have pledged to reach net zero by 2050. And we know a lot more about to follow, right? Something you might not know about carbon emissions is that there are actually 3 types. So you have scope 1, which is around the company's operations. You have scope 2, which is like indirect, like energy and all things around the company. And you have something called scope 3, which is actually the emissions along the entire supply chain, and which I would say very little, if any, companies in the world currently track. And possibly the more interesting thing about scope 3 is that it accounts for the majority of a company's emissions, 80 to 90%, depending on the industry. And the SEC, our friends over at the SEC, just proposed a law where large companies will have to disclose their scope 3 emissions in the coming years. So we see this increasing regulatory pressure coming in from all sides on these companies. So what does that mean for us as builders, as technology developers? Well, this kind of scope 3, it requires supply chain traceability, which we already do, right? So, okay, how do we make it then easier for people to basically capture the right information? And this is a use case we're building out at the moment. So now companies will start to be able to track logistics, commuting, traveling, waste, and recycling. We already track a lot of recycling. Capture that directly and have a complete overview of who the suppliers are, how much carbon those suppliers are emitting, and eventually, like our dream would be that they can even optimize their supply chains depending on what kind of carbon emissions they want to have, or help their suppliers to offset or improve their technologies, essentially. Okay, so we've got to the point that we're tracking these people's carbon, these companies' carbon. How do we bring it back to crypto? And we thought long and hard about actually building our own our carbon offsetting platform. And then we decided, screw it, there are so many amazing protocols out there already doing this. Let's bridge to them. Let's really bring them greater liquidity. And that's what we're doing now. You have like Moss, which you should check out, the Amazon NFTs, really amazing for reforestation. Flow Carbon, which is all about offsetting on-chain. Cut, which has like biomass green tokens. Open Forest Protocol, which is like satellite technology for reforestation. And Toucan, which they call it a carbon stack, so kind of an infrastructure for carbon offsetting. All amazing projects, all struggling to get real-world liquidity, and that's where we really want to come in and be a bridge to them and really think about ourselves as being part of a crypto ecosystem and not as a singular company in the space. So this is our journey for the next year or more. We want to bring the world's biggest companies and $2 billion in carbon offsets to crypto. So thank you so much. I'm Ella. Please shoot me an email if you have any questions, or I'm happy to answer any now if we have time. Thank you. Anybody? Cool. Looks like I answered all your questions. Okay. Thank you so much.